Hey traders, welcome back to another video. In this video, we're going to talk about a trading strategy that works very effectively across all currency pairs. So if you are looking for a trading strategy that is really easy and simple to follow, but has very good win rate, then this video is going to be for you. So make sure to watch around till the end. And now, without any further ado, let's get started. So the pattern that we're going to talk about in this video is the XABCD pattern, and this pattern is a trend continuation pattern. So we only want this pattern to be forming within our trending market. We do not want to trade this at the reversal points because we will be taking the leverage of the trending market by identifying this pattern and then placing our trade in the direction of the trend. So there are two types of the XABCD pattern. The first one is the bullish and the second one is the bearish. And this, as the name suggests, the bullish one forms within the bullish trend and the bearish one is found in the bearish trending markets. Now let's go ahead and talk about how you can identify XABCD pattern, and we're gonna talk about the bullish XABCD in detail. So we can really break down this pattern into two components. The first one is the XA wave, which we can see here, and the second one is the ABCD wave. So this XA wave is a very impulsive wave, which indicates that the market is impulsively moving in either bullish or bearish direction. So in this case, this XA wave symbolizes a very impulsive bullish wave, and then this A, B, C, and D wave represents a retracement phase in the market. Now the thing that you should keep in mind is this ABCD wave has some features that you need to pay attention to. So the retracement of this ABCD wave should fall within the 50 to 78% of this XA wave, as we can see in this case here. This final point, that B, is within the 78%, above 78 and below 58 of the overall Fibonacci retracement of this XA wave. So we can use this tool to draw the XABCD pattern in TradingView. And here you can see this is the XA wave, then this is the AB, which is our retracement wave. Then we can see again a little move in the upward direction. Then again, this is the final retracement. So at this D end, this D point, the wave XABCD wave is complete, and then we are expecting the market to continue to move in the bullish direction because the prior trend is also bullish. So here, the things that you should keep in mind is this XA wave should always be the largest wave in this XABCD pattern, and this AB and CD wave can be of equal length, or they can be a little bit smaller or bigger compared to each other as well. But none of the AB or CD wave should be as bigger as this XA wave, because we are counting on this ABCD wave to be the retracement of this very impulsive move, this XA wave move. So this AB and CD should always be smaller than this XA wave, and also the total retracement of this ABCD wave should fall within the 50 to 78% of the overall wave. Similarly, here we can see that this is the bearish XABCD pattern and is the same geometry as we discussed about the bullish XABCD pattern, but this forms within the bearish trending markets. Now let's go ahead and take a look at example so that you can understand this XABCD wave more clearly. So here we can see the overall trend in the market is bearish. Now let's go ahead and take a look at an example of the bearish XABCD pattern. So the first thing while detecting the XABCD wave is we should look at the overall trend in the market. For example, here we can see the overall trend is in bearish direction because there is the formation of this lower lows and lower highs in the market. So this represents the bearish trend in the market, and since we know that XABCD wave is our trend continuation pattern, so we should be looking for the formation of XABCD wave like pattern in which the first move is very impulsive. For example, this XA move is our first part of this wave. Then there is going to be AB, and then BC, and then CD. So here we can see that this total retracement, the ABCD retracement, is in the range of 50 to 78% of overall XA wave. As you can see, the D point is lying at the 70% retracement, almost 71% retracement of this total wave. So after that, we can see the market did move very impulsively in the bearish direction. So this is a valid XABCD pattern. Similarly, let's go ahead and take a look at another example so that you can understand it even better. So here we can see again the formation of this XABCD, bullish XABCD pattern, and I can just go ahead and take this 2 and then start marking the wave. So from here we can start marking the wave. First we need to check the overall trend in the market, and as you can see, the overall trend is bullish because there's a formation of these higher highs and higher lows, and we can go ahead and start marking this pattern by starting our X from here. Then this is going to be our A point, then B, C, and D. And this D, as you can see, is lying at 50%, 51% of this overall XA wave. So again, this is a valid XABCD pattern, and as you can see, after the formation of this pattern, market did move in the bullish direction. Now let's go ahead and take a look at what is not an XABCD pattern. So here we can see that if you start to draw the pattern, you can clearly see the pattern forming here, but there is a problem, and the problem is that in the first wave we can see the market retraced to this point, this AB wave, because this would be our AB wave, this would be our XA. Let me just go ahead and draw the pattern again. So if we go ahead and look at that, so we can see that this is our XA wave, and this AB is the first chunk of retracement. Now the thing that doesn't add up is this BC should not equal the A point or A level, because then it would be double top, and this double top is basically our reversal pattern. And this is the case with this bearish XABCD pattern. In case of bullish one, we should look for the formation of the XABCD pattern in which AB and CD are either equal length or a little bit longer or smaller. But this BC wave should not form a double top or double bottom. So this is not a valid XABCD wave because of the formation of this double bottom. And you can see it did not work as well, because here we can see the market clearly did not continue to move in the bearish direction, even though the prior trend is bearish. So this is not a valid XABCD pattern. Let's go ahead and take a look at an example of trading the XABCD pattern. So our entry point is always going to be the end of this retracement wave, and we can take our entry at this level here. So let me just go ahead and take this long trade, and we can put our stop loss at the 78% retracement of this XA wave. So we can go ahead and draw the retracement of this XA wave, and we can mark this 78% as our stop loss level. So we can take profit at two locations. The first one is going to be the level of point A, the biggest impulsive move, and the second take profit can be the 121% extension of this ABCD retracement. So let me just show you how that looks like. So we can start from here and go till here. So this level, this 1.272, can be our second take profit level. So as you can see, our take profit is met, and this is a profitable trade of almost 2.53 risk to our ratio, which is good. So as you can see, this pattern works very consistently across all currency pairs and is very easy to follow. If you have any questions related to the XABCD pattern or Forex in general, please comment down below. I would love to answer them. Also, you can visit our website www.forexb.co to learn more about Forex, and you can explore our related products that will give you edge in your trading. I will see you in the next video. Thank you.